really good things could happen to gold. First off, read this disclaimer carefully. Okay, we are going to look at money, and in this instance we are going to look at real money. We will look at gold. Here is the distance from the 52-week low, and we are really close to 52-week highs. Let's first look a bit at the seasonality. Okay, so the reason why there's good reason to be bullish on gold is that if you look at the entire period from 2004 to our current times, GLD, the gold ETF, so these are the months in which gold closed higher than it opened. We are currently in June, which is a bit of a mediocre month for gold, but July, strong, and August is literally one of the strongest months for gold. Okay, so we are entering a very good season for gold. That is obviously bullish. We are going to look at 3 ETFs in this video. We will look at the GLD, which is the benchmark, and we will look at the UGLD and the DGLD. Okay, so the UGLD gives you 3 times bullish leverage. The DGLD is good if you are bearish on gold. Okay, so let's jump into the charts. GLD weekly data points going all the way back to 2004. You can see the major bull market we had. And then we have this multi-year rounding bottom. Okay, so we have already made tremendous progress off the lows that we made in 2015. A very strong move. We are above many of the key moving averages. There is, however, a major battle on the horizon, and that is these resistance levels here. You can see that after this euphoric rally, this zone is a pretty serious battleground. Hence, given that we are going to enter a very strong season for gold, this could be the big opportunity, the time where gold smashes through these levels. What I really like is that we are doing something very smart. We had this major move, and now we are cooling down a bit. That is actually good news. That is very much good news. If you do some cycle analysis, there are actually some cycle patterns here. Let's do it a bit like this. You can see that, generally speaking, there seems to be some cycle patterns, which means that, given that we are now currently looking at my watch, we are looking at, this is the 19th of June. June is not a particularly strong month for gold, and it actually would be good for us to shuffle a bit sideways or potentially sell off a little bit, maybe find support at the 20-day or something along those lines. The RSI is cooling down a bit, which is nice to see. We do, however, have a bit of a bearish divergence between RSI and price. Though there's a big but, RSI was overbought here, and no, in this rally and this rally, the RSI was overbought on the weeklies. You could, as such, say that even though technically speaking we do have a bearish divergence between price and RSI, anyway, it is pretty clear that we have these cycles: rise, decline, rise, decline, rise. We haven't really had a decline in this cycle, so potentially what could happen is this. Okay, we did see that July and August are strong months for gold. They just are. If we go back here, boom, boom. And this is between this entire time period, so there is some decent reliability to these numbers. We are currently in June. It wouldn't be bad to have a bit more of a pullback, cool down the RSI a bit, and then in July and August we can make the big move. We can then take out these resistance levels, and then it doesn't take much to break out to new all-time highs on the gold. That would be extremely bullish. That would be really, really a good opportunity to make a stand, to just really show that this is full-bore new bull market. For all intents and purposes, this is a bull market already. I mean, from basically the key metrics. But those kinds of breakouts above, prior resistance levels, they are psychologically very important. But whenever it comes to these kinds of moves, you should of course get in early when things are, less certain. Waiting until, we have the breakout, that's, you're missing out on a lot. Just if you think about the move that we have seen so far, if you do it like this, this move here, it's been like 61% already. So that's my take on the weeklies. The accumulation distribution line is showing that there are a very good number of buyers. That's nice and bullish. There's a 53% correlation with S&P 500, which is not that strong. Here we have the daily data points. We haven't been shuffling sideways. Unlike these prior cycles where we had this clear pullback, we haven't really had it yet, which means that this bull market in gold is really strong. We would expect it to already have a bit of a pullback, but maybe we are not going to get it. It's hard to tell, but this is just very, very strong. Very, very strong. July, August on the horizon. Strong months for gold. The RSI has cooled down nicely here. Yeah, this looks nice. This looks very good for gold. Ideally, I would like to see the pullback. I just would. Okay, let's now look a bit at the leveraged ways to gain exposure to gold. So let's now look at the UGLD. This is if you are bullish on gold. Okay, you are a gold bull. Let's do the math. If we measure from this low here to the recent high, that's 152%. That's a pretty decent bull market. If we measure from this low here, to this intra-week high, 177%. So these leveraged plays, they do give you that extra boost. The correlation here with GLD is really good. On the weekly data point, we have a 98% positive correlation. That is what we want to see. Meaning there are some tracking errors, but they're not that dramatic. Very, very good correlation. Looking at daily data points, we have a 99% positive correlation. That is really good. So the UGLD, from a statistical standpoint, it tracks GLD pretty darn well. Meaning, based on the data we have in hand, it is a good way to play gold with leverage. That's great. But let's say that you are slightly bearish on gold, that you expect a bit of a pullback here in June. Of course, we are entering a very strong season, so this is not necessarily the ideal time to be bearish gold, but let's say that you're going to make some DGLD, you're going to make a speculative bearish play. Then the DGLD is the play. The negative correlation here on the weeklies is 99%. That is really good. On the daily data points, we have also a 99% negative correlation here between GLD and DGLD, which is the bearish play. If you're bearish on gold, this is the way to do it. One of the ways to do it, I guess. If I measure this here, so this was a pullback in gold, and during a pullback in gold, the DGLD will rally, and here you can see that the DGLD rallied like 45%. Pretty decent move. Okay. So the DGLD and the UGLD, they work pretty darn well. Okay. So that's my take on gold from a technical standpoint. If we go here to Finviz, you can see that we do have they drawing these trend lines. We are within this nice bullish pattern. You can see that there are options on the GLD. That's another way to play it. Some nice performance. Before we look at the ETFs in detail, let's have a bit of an educational segment about the chemical properties of gold. Gold as an element. So the gold, it has the symbol AU, atomic number 79. It is categorized in what is called the transition metals group. The melting point is 1062 degrees Celsius. It's one of the densest metals on Earth. It's number 5. I think osmium is number 1. So what's very interesting about gold is that it is very soft, malleable, and almost indestructible. And you can turn gold into these super thin leaves. I mean, you have probably seen videos on YouTube where people put gold on food and stuff like that. Which means that gold is also something that can be consumed, but of course that doesn't make sense. It is a great conductor of heat and electricity, highly reflective and pure. It does not tarnish or corrode, and it's not very reactive. And there's actually a lot of unmined gold in the oceans, approximately 10 billion tons. The challenge with the gold in the oceans is that mining down there is quite the challenge, but this is one of those avenues. Hence, if you do see a gold mining company make some progress on that front, that would be a very bullish sign. So look out for any gold mining company that is looking at that avenue, because that would be a very good investment opportunity. Here we have the GLD. This is an extremely liquid ETF. Nice expense ratio, and it is the most popular gold ETF. Okay, so here you have some comparisons. The cheapest ETF in this category is the SGOL. Largest assets under management is IU. That's the iShares Gold Trust. Most liquid, well, I mean, SLV is, that's no silver. Top year-to-date performer is GBUG, that's the iPath Gold ETN. But the GLD is definitively very, very, very good way to trade gold. Of course, nothing beats holding the physical metal, because the problem with the GLD is that it is denominated completely and ultimately tied to the US dollar. Meaning, if gold moves up huge in regards to some other currency and you are sitting with the GLD, you are obviously not going to get any of that performance. However, if you have a physical piece of gold, that gold is denominated in any currency you can imagine. Meaning, if you travel to another country where, let's say, gold has gone up, 500% the last year, then you will be able to get that return by trading it in at, a goldsmith. Nothing beats the physical. Here is the UGLD Velocity Shares 3x Long ETN. Of course, as I have said many times before, these leveraged products like the UGLD and the DGLD, they are not intended to be held for more than 1 day. They are just not. They can be held for more than 1 day, but if you do that, then you definitively need to watch the charts carefully, in case there are any divergence. We did do this statistical study. There was a very strong correlation with gold. They do track that benchmark very well, but there can be divergences. It's just how the cookie crumbles. Okay, let's now do let's look at US 500. We always look at S&P 500, the ultimate benchmark. Okay, so the futures so far today, this is still early, but we are seeing a bit of a bounce. We did have this very nasty sell-off, and we are recovering here. Let's do some, what should we do? Maybe we should do some fib retracements? Yeah. Maybe if we do it like, if you measure from this fall to there, we are approaching, a 77% retracement, of the fall. That's, bullish. So all things considered, the bulls are in control, but I just cannot get over this day. This day was such an aggressive move. It just eviscerated so many gains that took multiple days. And even after this move, the bulls have taken multiple days to recover. So obviously there are bears out there. They are. And let's quickly just look at the seasonality here. Let's look at the seasonality here of the SPY, S&P 500. Like this. Go. And let's look it over a long time period. So you can see that, okay, we are currently in June, and June is it's one of the weakest months for the SPY, which suggests that there is a risk of a pullback. July, August, and September are just, they're basically in the middle, not particularly strong or weak. If we go further back, between this period, you can see that July was the weakest, okay? So in this period, June is the weakest, here July is the weakest. Meaning you could make the case, a pretty strong case, that the June and July are risky times to be bullish on the S&P 500. That's something to think about. We have had a big rally. Many gains have been won. This isn't the worst time to take some profits on the SPY. Just isn't. The numbers are saying that. And the numbers also told us that, looking at it historically, this is a decent time for gold. So that's some opportunities. Okay, whatever you do, of course, don't fight the trend, and may the trend be with you.